There are signs that inflation might be coming off the boil, which is good news for anyone with a mortgage. Scott Morrison becomes the first former Prime Minister to be censured by Parliament, but he isn't going to apologise for anything. And the shockingly high number of people who died in Qatar building infrastructure for the Soccer World Cup. It's Thursday, the 1st of December 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. First day of summer. Can't get better than that.
No, it feels different, doesn't it?
Sure does. One of my favourite days of the year because spring's been great. Come on, summer. We've got Christmas, 3-4 weeks away. Whew, can't wait.
No, it's racing through, though. We're actually nearly at the end of the year. Sean, speaking of at the end, stick around at the end of the podcast. That was terrible. I apologise.
That was. Anyway, go on.
We'll roll with it. For your chat with David Bassanese, who is the chief economist at Beta Shares. We've spoken to him a few times in the past. He is a fantastic communicator.
Yeah, great man, Bass. He talks to us all about inflation and interest rates, particularly the number that came out yesterday, what it means for investors into 2023. And he has a very, very handy hint about what they should be looking at, what asset class investors should think about for 2023.
Yeah, it's a really good chat. That's coming up a little bit later on. The main story this morning, Sean, inflation in Australia eased to a 6.9% pace in the year to the end of October, helping trigger a jump in the local share market and hopes that maybe, just maybe, the pace of price rises won't accelerate much more.
It was a real surprise yesterday. The monthly Bureau of Statistics measure shows that the annualised pace of price rises dropped from 7.3% to 6.9% in October. Now, inflation is still high, much too high. Everyone from the Reserve Bank and market economists to workers and people with home loans are looking for signs that the pace of inflation has peaked. You can't definitively say that yesterday's number shows that, but wow, it's a good sign. Now, remember that the Bureau puts out a quarterly inflation number, and for the last quarter, that was 7.3% annualised. Both the Federal Treasury and Reserve Bank expect the December quarter number to rise closer to 8%, maybe a bit more, but at least the first month in that quarter has well and truly undershot that target, albeit the data is based on a smaller sample than the quarterly figure provides. Why do we care, Michael? Because the Reserve Bank is lifting interest rates, 275 basis points in the past 6 months, to head off inflation. If inflation slows, the chance of big rate rises in coming months lessens, and that's good news for home repayments, consumer confidence, and, Michael, even house prices.
Yeah, indeed. So where are prices rising the most, Sean?
No great surprises. The most significant contributor over the year to October was a 20% rise in the cost of new dwellings. I'm feeling that one, Michael. I'm feeling that way. And that's because plenty of people, like us, are building, and there's a shortage of materials and labour. Having said that, I just want to boast, we had 4 tradespeople in the house yesterday.
Maybe you're paying more than anyone else.
Oh, maybe. We had 2 painters, a plumber, and a builder. I thought that's pretty good.
That's actually quite. And they work the full day?
Yeah, they work the full day. Yeah.
Okay, cool. There we go.
There you go.
Once again, Sean's self-interest is driving this podcast. Please carry on.
Absolutely. I should move on. So apart from building costs, automotive fuel was up 12% in the 12 months. Now, remember, that includes a reinstatement of the 22-cent a litre fuel excise tax, and fruit and veggies were up 9%. That's a bit less than the increase the month before, and that's because the flood shortages have eased somewhat. One category which well and truly slowed in terms of price rises was holiday travel costs. That's because the previous month included school holidays. The moral of that story is if you don't have school kids, take holidays outside school holidays.
Okay, so can we wrap all of this up into kind of the news that most of us actually really want to know, Sean? What's it mean for interest rate rises into the future?
Oh, I was quite enjoying that little bit of economics.
I could tell. You could hear the joy in your voice.
It was. Look, at the margins, the figure will add to the case of not lifting rates as aggressively in coming months. Higher rates since May look to be having the desired effect of taking some heat out of the market. Now, some economists yesterday actually came out and said, look, inflation might have peaked. We might not have to push interest rates up quite as high as we thought. Indeed, action in the bond market suggests that traders thought that. The Reserve Bank board meets next week and markets have priced in a 25 basis point hike. I think that's probably a fair assessment, but certainly yesterday's inflation data is good news for those who are over higher interest rates. And I think that's most of us outside pensioners.
So how did the local share market react to all of this yesterday?
Well, it started the day a fair bit lower, but immediately after the late morning announcement on inflation, the S&P ASX 200 jumped sharply. It finished up 0.4% to 7,284 points. Now, that's another closing high since late June. It was a good day for the miners. BHP and Rio Tinto were among the best of the large caps. Industrial property group Goodman Group also did well. The big banks were lower. Telstra and Woolworths were off a bit. Lithium Group Sayona Mining was the best performer, up nearly 10%. Guess what was next best, Michael? It's broken record here, broken record.
What?
Whitehaven Coal.
Oh, of course.
And next, New Hope Coal. There you go. They just don't stop, those two. Carsales.com also did pretty well, up 5%. On the other side of the ledger, Collins Foods continued its poor run. Now, remember 2 days ago, on Tuesday, it came out and said basically it's going to up the price of Zinger burgers because the cost of ingredients were much higher. Its share price fell 20% on Tuesday. Yesterday, it was down another 4.5%. Not so good. Bit of corporate news around yesterday. Just run through it briefly. Rio Tinto said it's planning to invest another $600 million in renewable energy assets in the Pilbara. The money will fund the construction of 2 100-megawatt solar power facilities and a massive on-grid battery. National Australia Bank said it had failed to win staff support for its offer to increase wages by between 3 and 5%. It put the deal directly to employees. Basically, it bypassed the finance sector union. And online furniture business Temple & Webster told its annual general meeting that sales fell 14% during the 5 months to November 27. Now, that's largely because no one's in lockdown. And remember, lockdown was when all the e-commerce companies like Temple & Webster did best.
Indeed. Now, what about international markets? What's happening?
Well, I thought I'd have a look at cryptocurrencies. We haven't really mentioned them much recently. They're just doing a bit better. Bitcoin had a good couple of days, rising 3.5% yesterday to close at around $17,000 a unit. Ethereum was up nearly 7%. Signs that inflation may have peaked in some economies has helped risk assets like cryptocurrencies. They're just finding a few more friends at the moment. Oil prices are back up after figures showed a drop in US inventories. Brent crude is trading around $84 a barrel. I must say though, Michael, petrol prices at the moment aren't too bad, around $1.70 or so a litre.
Have you noticed what diesel is at the moment, Sean?
Oh, no, please tell me.
Oh, still around $2.30. What a surprise.
Yeah. The Aussie dollar dipped after the inflation news yesterday, but recovered somewhat. It's trading around 67 US cents.
It's a big 24 hours.
Sure is. Plenty going on.
Yeah, a lot going on. We'll be back in a moment with the rest of the day's business news. Sean, Scott Morrison has become the first former Prime Minister to be censured by Parliament, though if he's upset by it, he isn't really showing it, is he?
No, it's actually worth going and having a look at his press conference and then having a look at what Anthony Albanese said in question time. They really went for it. Mr. Morrison yesterday said he still believed 3 of his 5 secret portfolios were warranted, notwithstanding the Bell inquiry said exactly the opposite. He isn't going to apologise for something he says was necessary in the face of an unprecedented crisis, and says he would have told people about the extra portfolios if he'd been asked at press conferences.
I don't know if that really stacks up, does it?
No, I don't think so. The House of Representatives ended 86 votes to 50 to censure Mr. Morrison. That included the Greens and all the crossbenchers voting for it, except for Bob Katter. Now, ahead of the vote, the coalition claimed the censure motion was a political stunt, though Bridget Archer crossed the floor and voted for it, and the former Home Affairs Minister Karen Andrews, whose portfolio Mr. Morrison became a shadow of, abstained from the vote. So it wasn't totally partisan.
No, not quite. And just staying in Canberra, Sean, the National Anti-Corruption Commission has passed Parliament.
Prime Minister Anthony Albanese and Attorney General Mark Dreyfus said the National Anti-Corruption Commission will be established mid-next year. The watchdog will have the ability to investigate sitting and former Australian politicians for corruption, compel witnesses to appear and hold public hearings in extraordinary circumstances. The NACC has retrospective powers as well, allowing it to investigate alleged abuses of power before its creation. Now, it was part of Labor's election campaign promises, and yesterday Mr. Dreyfus called it the single biggest integrity reform of Parliament in decades. One thing I do like about it, Michael, it's already got an acronym, NACC.
Oh, it was probably drafted with an acronym in mind, wouldn't it? Something like that. You really
Possibly.
have to begin with the end in mind, really. Now, Sean, gas wars are heating up. Did you like that one? I feel like we almost need a laugh track here for those times when you leave me with a frosty silence. Frosty, there we go, did it as well. Labor is planning to cap prices between $11 and $13 a gigajoule for commercial and industrial customers.
A report in the Financial Review says the federal government is finalising plans for price caps on gas following a very spirited campaign by small businesses struggling with soaring prices. Also claims by manufacturers that they just can't survive unless the government acts. Already, Canberra has found itself at odds with Queensland. This is before even announcing these caps. Premier Anastasia Palaszczuk in the past couple of days has put federal Labor on notice, saying she'll oppose any attempt to force a similar price cap on coal used by state-owned energy companies. She said, and she has a point, Queenslanders shouldn't have to sacrifice returns, and she'd demand compensation if caps went ahead. I know from our consumer side and from a business side, caps are a good thing. But if you've spent a lot of money developing coal mines and gas mines, there's a pretty good argument to say, why should I actually be penalised for that?
Sean, earlier in the show, we spoke about the inflation data out yesterday and how the cost of new dwellings was a major driver of higher prices. But building approvals certainly came off the boil in October.
Yes, they were down 6%, much more than expected. They're now lower than they were a year ago. Of course, the number in the inflation figures that I referred to, we were talking about the cost of new buildings, so the approval for those buildings would have happened a long time ago. It really just shows how much the sector has come off the boil. House approvals were off 2.4% in October, while apartments tumbled 11.3%. Mind you, over the past year, apartment approvals are actually up and house approvals are down. There was also credit data released yesterday. The pace of credit growth is falling, with housing and personal credit slowing, though business investment remains high.
Now, strangely, Sean, it feels like a long time since we've talked about Star Entertainment Group. And considering we were talking about them pretty much every day for a while there, I've missed them. But AUSTRAC is now suing Star over allegations that VIP patrons churned dirty money through the group's Sydney, Brisbane and Gold Coast casinos.
Before we go on with this story, I guarantee you the board and management of Star would be delighted they haven't been in the news for a few weeks.
I think you're probably right there. They would be loving that.
It changes today because of this story, but yeah, I tell you what, Star, Crown Resorts, they just haven't had a good run in 2022. Anyway, the Financial Crimes Watchdog filed its case yesterday, claiming the alleged money laundering amounted to serious and systemic breaches of federal law. The Star's failure to manage risky patrons in turn exposed the Australian and global financial system to systemic money laundering and terrorism financing risk over many years, according to AUSTRAC. Competitor Crown Resorts is facing a similar court action. It's put aside about $600 million to pay for fines levied by the states and the regulator. The Star is going to have to put a stack of money aside as well.
The banking regulator, APRA, has modelled the impact of climate change on the big lenders and thinks they're in pretty good shape.
The Australian Prudential Regulation Authority's Climate Vulnerability Assessment said increases in loan losses arising from climate change would be unlikely to cause severe stress to banks. However, and I think this is the interesting bit, the regulator identified mortgages in Queensland as being higher risk given the state's susceptibility to rising temperatures. Makes sense. It found that mortgage loss rates in Queensland could rise by more than 35% by 2045, higher than an estimated 10% increase in New South Wales and around 6% in Victoria. Do you know what that means? It means that banks and lenders will start segregating geographies and charge some people more for home loans than other people. That's where we'll end up there.
It sounds like a bit of a sleeper story for this weekend. The weekend
maybe.
edition, Sean, and I'm going to reserve it.
It's yours.
Thank you. All right, moving on to overseas news. Now, Chinese law enforcement bodies have promised to crack down on hostile forces and their sabotage comments in a not-so-subtle threat to protesters angry about COVID-19 policies.
Law enforcement agencies have been told to take strong measures to safeguard national security and social stability. Illegal and criminal acts that disrupt social order won't be tolerated, authorities said. Now, the protests have been the most significant display of unrest in President Xi Jinping's 10-year reign. the rest of the world has been waiting to see how Beijing reacts, and this is certainly the first step in that.
Sean, the Soccer World Cup continues with some of the big names in world football and a couple of smaller ones making it through to the final 16. I mentioned this at the top of the show that yesterday a top official involved in the tournament said that the number of worker deaths building the impressive stadiums was somewhere between 400 and 500.
Incredible, isn't it? The Secretary-General of Qatar's Supreme Committee for Delivery and Legacy's estimate is much higher than previous numbers from Doha. Those numbers were around 40. The admission was made to Piers Morgan, the British journalist. It just seemed to slip out, and it's sure to reinvigorate criticism by human rights groups over the toll of hosting the Middle East First World Cup. Now, migrant labour built more than $200 billion worth of stadiums, metro lines, and new infrastructure needed for the tournament. But obviously, the cost in terms of human lives is just shattering.
Yeah, that's a shocking story, that is. Finally, Sean, climate change is causing thawing of ancient permafrost. How about this? Reviving 24 extinct viruses, including one from a lake that froze more than 48,000 years ago.
Yeah, this story is definitely for you. You're a bit of a science nerd. So,
well, it started out with viruses, but here I am thinking, I wonder what else they're finding in the permafrost. Are they finding any woolly mammoths?
Woolly mammoths, perhaps. I don't know. Maybe. So researchers examined ancient samples collected from the permafrost in the Siberia region of Russia. According to Bloomberg, they revived and characterised 13 new pathogens, what they termed zombie viruses, and found that they remained infectious despite spending millennia trapped in the frozen ground. It's just incredible. The potential revival of a virus that could infect animals or humans is problematic, but the scientists said their work can be extrapolated to show that the danger is real. So, quite an amazing story.
That's just really disturbing, Sean.
I know.
Just digging up frozen viruses, reviving them. Okay, you know what? Let's not touch them.
Let's not. Let's leave it. Actually, I don't think we've got any choice. It's climate change that's causing them to reappear.
All right. Okay. Up next is the Fear and Greed Daily interview with David Bassanese, Chief Economist at BetaShares, which is a supporter of this podcast.
Yes, David is a good man. He tells us all about what he thinks will happen to interest rates on the back of yesterday's inflation numbers. Also, he gives his view on where to invest next year, which is fascinating.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 1st of December, 2022. Make sure you're following the podcast and join us online on LinkedIn, on Instagram, Twitter, Facebook, pretty much everywhere, really. I'm Michael Thompson, and that was Fear and Greed. Have a great day.